Hello everyone. So in this session we will learn about a concept of a goodwill. Now before understanding what is a goodwill, let us see one example. Say there are two ice cream parlors A and B selling similar variety of ice cream, but people prefer A as compared to B. Now what could be the reason? One is taste and quality of A is better than B, then it would be possible that A is offering more variety of ice creams and more combinations as compared to B, or A has done more promotions and offers. Now there could be one more reason, location. Location of A is better as compared to location of B. Now this could be reasons why people prefer A as compared to B. Now every person has a different reason. Some people may like taste and quality. Some people may like the variety of the ice cream that is being offered by A. Some people might be seeing the promotions and offers, various discounts, and might be going to A. Or some people prefer the location and they prefer A over B. Now, this is known as a building of a reputation by A. Now, A has built a reputation in the market, reputation of its business in the market over the years. Now, this reputation which is built by A as compared to B is known as a goodwill. Now, every business builds some reputation over the years by providing good quality, good variety, then the location of the business. So, all these factors lead to building of some reputation of a firm or a business. Now, this reputation is known as a goodwill. Now, goodwill is a asset, but it is a intangible asset since there is no physical existence and it cannot be touched by hand. It is known as an intangible asset, but there is a existence of goodwill because of the reputation built by the business over the period of years. So it is an asset, but since there is no physical existence, it is known as an intangible asset. Now, as per accounting standards, intangible asset can be recognized in the books only if it has some value. And that value can be clearly identified. What does it mean? Now, accounting standard states that intangible asset can be recognized in the books only if it has some value. Now, goodwill has some value, but it cannot be clearly identified. That is, the goodwill, it is very difficult to sell the goodwill or dispose the goodwill without selling the other assets. So, the value of the goodwill cannot be clearly or specifically identified. So, this condition is not fulfilled by the goodwill. Next, future probable economic benefits can be measured reliably. Now, future economic benefits, that is, Because of the goodwill, whatever are the future economic benefits for the business, they can be measured reliably. Now, even this is not possible. We cannot measure reliably ki what is the future benefit because of the goodwill that is built by the firm over the years. So, self-generated goodwill. What is self-generated goodwill? The goodwill that is generated by the business itself. Now, this self-generated goodwill or reputation is not recognized in the books of accounts. Now, if we purchase the goodwill or if some amount is paid for the purpose of the goodwill, then only then that goodwill is recognized in the books of accounts, and then it is written off systematically. Only if the goodwill is purchased or some payment is made for the purpose of the goodwill either in cash or kind, only then that goodwill is recognized and then it is written off systematically. So as per accounting standard, self-generated goodwill cannot be recognized in the books of account, since we cannot clearly identify what is the value of the goodwill and the future economic benefits that can be received only because of the goodwill cannot be measured reliably. So, because of these two conditions, this intangible asset is not recognized in the books of account, that is self-generated goodwill. But if the goodwill is purchased, then it is recognized in the books and then it is written off systematically. Now, if the goodwill is not recognized in the books, then what is the need for valuation of the goodwill? Valuation of the self-generated goodwill. What is the need for that? Now, whenever there is a dissolution of a partnership firm or any business, we need to value the goodwill to understand what is the business worth of a business or a worth of a firm. Then, in case of a partnership firm, when there is a admission of a new partner or death of a partner or retirement of a partner, then we need to value the goodwill to find out what is the value of the firm, so as to understand what should be the consideration that will be received from the new partner for the purpose of the goodwill, or in the case of death and retirement of the partner, what is the amount of consideration that is required to be paid to a partner, that is a legal hire of the partner in the case of death, or in case of retirement of a partner to retiring partner by other partners for the purpose of the goodwill. Then say if in the partnership firm there is a change in the profit sharing ratio, then if there is a change in the profit sharing ratio, we need to value the goodwill so as to understand the consideration that is required to be paid for from one partner to other for change in the profit sharing ratio. Now there is a change in the profit sharing ratio, so in future some partners will be receiving something less and some partners will be receiving little more, so there will be a gain and loss for each and every partner. Now this gain and loss is for the future economic benefits that will arise because of the change in the PSR. Now every partner will receive the future profit as per this new PSR. So the partner who gains needs to pay some consideration for the purpose of the goodwill to partners who lose the profit sharing. Now, because of this, there is a need for a valuation of the goodwill. Now, Valuation of the goodwill. Now, since goodwill is an intangible asset, we need to estimate what is the value of the goodwill. Now, there are different types of methods by which we can estimate the value of the goodwill. Now, first method is the average profit. Now, we can measure the value of the goodwill based on the average profit. This can be simple average or weighted average. Second method is a super profit. Now, super profit is a profit that is earned above the normal profit. Normal profit is the standard profit that will be earned by other similar businesses in within that particular area or within that particular locality. So whatever profit is earned above the normal profit is known as a super profit. Then there is one more method, capitalization of profit. So this Now, in capitalization of the profit that is earned is compared to the actual capital employed and the normal rate of return, and accordingly whatever is the excess amount is known as a goodwill. So all these methods are used for valuation of the goodwill. Now, any business or the firm, depending on its nature, will decide what should be the method that is used for the valuation of the goodwill.